The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginner's Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
Now we have our gravestone doji candle here. Sellers won't have won a tough battle at all. Sellers have forced buyers out of the market, pushing price lower. Signals a rejection to the upside, a bullish rejection, clear directional bias. So this is a very unique candlestick here. We have such a very large wick. And again, here is our wick. Let me just point this out on screen here. Why is this so significant, guys? Because this is what I want you to start thinking about these Japanese candlesticks, not just looking at the signal, but thinking as a trader, what does this tell me? What happened? What effectively happened within today's trading? Well, the buyers were trying to push this market to the upside, and then perhaps this is 200 prices or 200 pips in the market that they traded this up. Okay, but effectively that whole move was pushed down by the sellers, and they traded it down to close just towards the low there, and they've retraced that market perhaps 240 pips. That is very significant. I would not want to be buying that candlestick, even when I see this in the market, even if it's trending to the upside like this. That is not a buy signal for me. This candlestick here, I would look to take profit, of course, if I'm in the trend to the upside. However, it is, of course, a simple rejection signal. You could look to speculate to try and sell this candle as well, hoping the prices move down. Okay, so it is a very tough battle. Think of the battle for price, what happens in each candlestick, who won the battle, and how extensive or how tough that battle was fought. Again, the Dragonfly Doji is the inverse. It is the same concept, of course, opposite price structure to the Gravestone Doji. Buyers have won a very tough battle. Buyers force sellers out of the market. So there's no opportunity here. When we see this, there was an opportunity during the course of this day for sellers, but they've been wriggled out of this market. They've been shaken out, and the bulls or the buyers are in control of this market. Signals a rejection to the downside, a bearish rejection, and has a clear directional bias. We are trading up, guys, in this candlestick. When we get the close here, confirmed, this is a signal that the market wants to move to the upside. So let's put some of this into practice again. We've understood quite a bit there, taking that in again. You'll have an opportunity to revise all of this with today's recording. Let's look at some movements here in the S&P 500 daily price action chart. Okay, what can we spot in the market? Well, I just want to bring you to note here on the left hand side with our key. Of course, we have bulls entering the market here, and of course then alternatively we have bears entering the market here. Okay, now the one thing that I would point out is this is a very well conserved trend to the upside, and we can see that notably. We know the S&P and the US markets were very strong there towards the end of 2018. Towards the end of 2017 and at the start of 2018 this year. And I've just chosen this, as a market correction to ask you the question, guys. Which candlestick provides us with the crucial information as to where the market is more likely to trade? So we'll take away some of this annotation. If you can choose one candlestick to give us real indication to where the market is trading now, I'd just like to note there is a few. So which candlestick gives us the information that we need to make a trade here? There's plenty, but let's just try and pick a few. Okay, well, what I'll do is I have one on screen here which I'll point out, and it is this engulfing bear candle, because, well, basically it is absolutely an engulfing candle. It outdoes the recent price action. Here is the recent price action here. Let's say the ATR is 200 pips. That is not the case, but you can see, guys, how much this outdoes the recent price action there. okay, and again comparatively to the last 4 to 5 trading days, and it is engulfing, so it opens here and trades down and closes at the low there. That signals that this market wants to move one way to the downside. So that is my shout for some crucial information to look to trade this market, and it tells me, guys, well, it's time to sell this market right at this price. Okay, so I'll take away my trade idea. Guys, do we have any other candlesticks or any other Japanese candlestick structures that we can point out that can look for opportunities? John, you're saying the same bearish candlestick. Okay, great. Kevin, the doji candlestick there in the middle, the doji candlestick there. Yes, are you pointing at this one here, Kevin? The one before? Oh, this one here. Okay, absolutely. Yeah, let me just take away some of this annotation. Yes, that's a great signal, Kevin. Why might that be? Again, well, what has happened in this candlestick? Well, the trend is to the upside. We've seen that with 1, 2 very strong candles here showing this trend to the upside. And then we get a bit of price action. Again, we're uncertain because it just pulls back a little from the high here. However, this candlestick, we'll call this candlestick 4. What happens in the candlestick is, well, the market, I'll just use a different color here, potentially the market trades down during the course of this day and it looks to sell, but at some stage the bulls come back into this market and trade this up to the upside, and it closes again just at the opening price. But again, the wick of this candle is so great that you can tell that the actual sellers here have been outdone in the market. So there's been a rejection to the downside, absolutely, Kevin. So that's a good spot. And again, where does price lead to just after as a signal from this one candlestick 4? Well, we see the market actually gaps up. So it gaps up, it retraces, and then it simply looks to follow the trend. So albeit there's a little more volatility in here, so it's a very good signal, but of course the market trades a little with a little pullback just thereafter. But very good signal, Kevin. Thanks for pointing that out. Let's move on then. Well, we've discussed some of the Japanese candlesticks. Let's take it back to discussing really buyers and sellers in the market, because that's what we want to be. Interested in buying the market or going long? The aim is to make profit from a price increase. That's fairly straightforward. In times of economic expansion, investment in stock and commodities increase, while large financial institutions become strong bulls in search of return. Buyers focus on strong markets. Okay, now why did I put this into this slide here at this moment? Well, because guys, well, we know our role as retail traders, okay? But if we know what other large financial institutions are looking to do in the market, they're looking to become strong bulls, let's say, because we see economic expansion. Well, what are we likely to do, guys? And I'll give you a clue by just writing on screen here if I can. We follow the money. Follow the big money, guys. Follow the big money, and we look for those big opportunities where large financial institutions are going to move the market perhaps over the next month or 6 weeks, perhaps 300 or 400 prices in an equity index or something quite similar. So that is our job, guys, to understand the markets, how they move, how the big institutions are moving the price, and how we can look to profit as well. After the financial crisis in 2008, recovery efforts to stimulate economic performance turned the Federal Reserve, the Bank of Japan, and European central banks into extensive buyers of two main asset classes, equity markets and bond markets. Now, they do this through quantitative easing. This is a little fundamental analysis, but again, let's bring it back to our job as a retail trader to understand the bullish price action, okay? And this here on screen is very simple, indicative, bullish price action moving to the upside, okay? And you can look for many buying opportunities there. Now the bear, i.e. the seller, interested in selling the market or going short, the aim is to make profit from a price decrease. Sellers aim to capitalize on the volatility of a market downturn or even short-term price shocks. Panic selling can often cause prices to move much faster to the downside than to the upside during bullish periods. Sellers focus on weak markets, okay? And again, moving back to the fundamental discussion, central banks often create policy that is focused on revaluing domestic currency. And you may see this, of course. They can do this by flooding the bond markets with supply issuance, indirectly selling more bonds. Again, too much context there, but the point being that this is a role of a large institution or local central bank. They are the guys that move markets, and all we look to do is look at the price action, see how it's moving, get involved and make money when other traders are, of course. And here we have bearish price action. So let's discuss, guys, looking at different time periods. We've just went through a lot of these Japanese candlesticks. I would hope now we're getting a good understanding of how to look for opportunities. Okay, let's try and put this together, and we'll look at trading different time periods. Okay, so it's very important to know, guys, that there are opportunities in one candlestick. Okay, so what I showed you there was, and I'll just draw on screen there, let's say let's just choose a candlestick here. Let's say a candlestick like this. Okay, effectively it opens and closes at the same price right here. Okay, but there is opportunity in that candlestick. Okay, let's say we are in a bullish trend moving up to this candlestick here. Okay, well, when the market is down at this price, if we believe that there is an opportunity, that this is a very strong bullish trend and it's looking to continue, well, that could be a buying opportunity for us. So within a candlestick that is actually bearish, we can look to say, is this a buying opportunity? Because it all relates to trading different time periods. I'll use this as an example. Here in front we have the 1 minute price chart. So this is only 1 minute, okay? And if we look at the chart, succinctly, guys, let's say the time here is 6th of February, but 22 minutes past 8 and 46 minutes past 10, okay? So we have roughly around 2 hours and 20 minutes of price action there, okay? All of this is simply only 2.5 hours, say. But look how much price movement there is. Is there opportunity in this one price movement in a 1 minute chart? Of course there is. And I might relate to just looking at the price action shorter term as opposed to the overall prospectus of the candle. So the question I would like to pose, guys, is how do we decide to trade? How could we decide to trade this again? Well, let's use some of the knowledge that we've gained with the Japanese candlestick again, and we'll look for different opportunities. Okay, so I'll point one opportunity just based on the candlestick. Okay, so what I can see on screen already is this candlestick right here, and again it's a rejection to the downside. Then we see, of course, what we could look to do is either buy this candlestick here, or let's say we want to buy new highs, so just a break of this little structure here. So we buy this candlestick here and we get a very short-term price. And again, this is in a market like Bitcoin, which it has significant volatility and opportunity. So it's a great market to trade intraday. So that is one buying opportunity again, but this market has so much more to it indicatively to show us opportunity. So I'll just highlight on screen here some opportunities. Well, what we can see here is something quite significant, okay? Now this is where we start to combine all of these candlesticks together, because we define them as quote unquote market structures, okay? And there's certainly something forming here. We have this price action here. Okay, so when we see this third one, I would say at least, what are we likely to do at this stage? Just if we can get the signal perhaps with the candlestick there. We'll look to sell that market. Of course we'll look to sell that market. Why? Well, because it shows us something quite significant. This market structure indicates a series of lower highs to us. That indicates that, well, there's going to be selling opportunity, there's going to be a bearish trend, and perhaps we can look for some times to sell. What should we do here? Well, perhaps we could look to sell this market in the short term, so for the 1 minute pricing chart. However, let's understand the concept of our trading. If we're looking for a very short term winner, perhaps over the next 10 minutes, that might be the best trade for us. But again, we can use much more analysis, and again, we'll discuss this in a lot more detail throughout the beginner's course. I'm just trying to get you to proactively start to think about being a trader at this moment. So this is effectively the 1 minute price chart on the 6th of the 2nd, 2008. Let's look at the same market on the same day, the 6th of 2008, 6th of the 2nd, and look at the daily price chart. What we can see, guys, is something quite significant because, well, we've seen a bit of a downtrend in the market there in the past slide, but effectively what we can see here in this candlestick is, well, it's rejecting these lows. It's rejecting these lows here in and around, or I'll just take away that annotation, 6,238 level. Okay, so that is effectively a bullish candlestick, even though we're looking to trade that in the short term just to the price action. So start to move across different time frames, pick out the best trade possible. That is how we look to analyze these Japanese candlesticks in their total structural form. Okay, so let's go through this in a little detail again. How do we decide to trade? Well, again, we have now taken a short sell position from the previous chart. Let's say, for example, there, the time to sell. Okay, something new has developed when we've zoomed out and looked at today's price action. It is, of course, a bullish hammer. So we have a strong bullish day. Effectively, we're selling into. Selling into buyers is not a good choice. The nature of the candlestick itself signals a rejection to the downside. So do we really want to be short? Is it really a good time to sell the market? So we're starting to add some functionality into our trading. We understand now, some of the signals that Japanese candlesticks provide. Can we cognitively look across different time periods, perhaps 5 minute, 1 hour, and one daily price action to give us the best signal? Perhaps at that moment, they're all providing the same signal. That is a trade that I would say to get involved in. So that's effectively what we look to do by simply trading the price action. And again, it's understanding that all of this information is involved in the candlestick. We have another market here, okay, and that the same question is sufficed. How do we decide to trade? How do we decide to trade this market again? If we can pick out a few candlesticks again, I would say, let's move across. Probably this one here is our best signal in terms of the bullish engulfing to follow future price movement. Again, we don't really get a retrace, so that's good. And we see the prices move up there and beyond. So that's a good signal. Of course, we have a very strong bearish candle, and we see subdued price, although it doesn't continue to move on too much in this range here. Okay, so two very good signals there, albeit one is better than the other. But what can we look for in terms of market structure, guys? Do you remember when we try and define these candlesticks in a range, what we see here? Well, a series of higher lows. That indicates to us that this market wants to trade up. Clear sustained bullish trend is forming. The bullish daily candlestick is there, of course. What can we do at this point? Well, this candlestick here shows us some indecision, guys. Again, we see we're in a trend to the upside. We see our spinning top candlestick again. That can give us an idea that, well, we could see possible trend continuation. And again, perhaps the decision is to buy this market. Okay, so that, of course, may be the case. Let's move across to yet another market. And again, we have the euro dollar in 30-minute price chart here. Okay, and what we could look to do is trade this market again with a similar function. How do we decide to trade? Well, the market is in a more short-term downtrend at the top of a short-term range. Great. Does the technical analysis favor a sell in the short term? And again, so we're starting to build in our thoughts about being technical traders with no technical indicators, just by looking at the price action, looking at the trends, understanding the movement of Japanese candlesticks and what they can tell us. Here we have 3 consecutive lower highs, which will tell us that there's a trend forming, of course, and it's time to sell the market. Okay, so that's adding some discipline into your trading. Momentum and direction is, of course, very important. As traders, we say, technical traders, we say that momentum leads price. Okay, momentum will shift or move first, then price will follow. That is why we use momentum oscillators as well to look for momentum shifts. So let's delve into this. Momentum, direction, and trend. These characteristics are the basis on which price action moves, and from which the technical trader derives analysis. They are together the most effective measurement to indicate where the market is more likely to move to. Okay. To emphasize momentum, think of a recent market bubble like Bitcoin. Okay, so Bitcoin, we know that it had serious momentum behind, sentimental momentum behind its movement, almost a euphoria sort of phase it was moving into. Then think of an equity market collapse like 2008 financial crisis. These two examples epitomize how market momentum can cause drastic price change. Okay, so we see drastic price change. Okay, and so a lot of it's a result of momentum, not simple price shifting. It's the momentum, it's the sentiment behind that movement really causing such huge moves in these markets. Momentum and direction are the basis of trend formations and are the trader's initial basis to technical decision making. So again, we will look at some technical analysis throughout the beginner's course as well, but let's start to build first of all on our understanding of momentum to the price action. Okay. In terms of understanding it fundamentally, guys, just think of the economy growing. Numerically, we measure this with the GDP, or the gross domestic product. Okay, so you may see, for example, the GDP of the UK at 3%. You may see the GDP there of China at 7% in 2017. Absolutely fantastic. They're in 6% in the United States. So that is a numerical value to the growth of the economy, or the gross domestic product. The underlying markets within the region will form a relative bullish trend to reflect this progress. So isn't that going to be the case, guys? Isn't that entirely logical? Do you think you would ever get a figure numerically where the economy of Germany is performing at 4% growth on the year? However, the trend is a large bearish trend to the downside over that year. Do you think that would ever happen, guys? Absolutely not. If it's more specifically the German DAX, very, 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 very unlikely to happen. That's not going to happen, of course. Likewise, if the underlying supply and demand function of a commodity drastically leads to long-term price declines. So the supply and demand function of oil perhaps leading to long-term price declines. We've seen that in recent history. Logic will be expressed in the momentum, the direction, and the trend. So you see how I'm starting to weave this in, guys. As traders, we will want to buy markets that are strong because momentum, direction, and trend is in our favor. Alternatively, we will want to short a market that is weak because the price action takes direction and has momentum. So it's all indicative of one another. It is perhaps obvious to say that you must trade logically. However, it is in our vast experience, guys. And I want to just take this moment, take this point in, please. It is obvious to say that you should trade logically, but what we experience with the vast majority of retail traders, they do not incorporate or follow a logical understanding of momentum, direction, and trend in their trading. When something is trading down, it's moving down 20 pips, moving down 40 pips, moving down 60, 80 pips. Some traders just think, when is this going to stop so I can buy that market? That is not the best idea. We're not value assessors here. We're not looking to systemically choose bargains across these markets. No, we are looking to follow momentum and direction again. So you should be looking to capture that trend, i.e. the trend is your friend. Okay, that is how we look to assess these markets. So I have something here, quite a gift for you just on this next piece of education here. Just sit back for the next few minutes and enjoy this, because we're going to discuss momentum and volatility in a bit of detail. Okay. So what we have here, guys, is the official bank rate meeting there of the UK with the asset purchase facility and the MPC's monetary policy voting. Okay. So it's the interest rate change there in the UK, and we're going to have this figure out in the next 10 seconds. Okay, so we're looking at the euro pound, the pound dollar, and the UK FTSE 100. And of course, at 12 o'clock, the figure comes out. Okay, already we're seeing some volatility. We're seeing some momentum in the euro pound. Okay, what is that leading to? It is leading to a trend to the downside. You can see the trend has already started to form in the last preceding 5-minute price action up to the figure. Then we can see, guys, a shift. Of course, if we move across, we can see that This is the pound dollar. So the first leg is to the front side, the base currency, the pound is strengthening here against the US dollar. Okay, this is effectively what we're seeing. If we move across to the UK FTSE 100 again, unchanged. Okay, so 3 UK assets there, sterling, 2 sterling markets, and not a lot of volatility in the FTSE. So we can see momentum really moving across different asset classes as according to one specific figure there in the United Kingdom. Again, sterling moved, the currency pair moved quite a lot there in terms of a reflective non-interest rate change. So that was all in the short space of time. So when we look to define these momentums, these shifts, again, we're all trying to combine what is the trend, what is the momentum, what is likely to happen when we see this momentum, where is price action going to lead to. That is how we look to factor in our trades. Okay. In the study of trend identification, it is important to try to explain what does the trend tell us. The market has directional bias. The movement of price is supported by all known fundamentals. Correlated markets are likely to support this trend and follow the similar price increase or decrease. The market is more than likely to continue in this direction, ceteris paribus. That is simply Latin for all other factors remaining constant. The market is more likely to continue in this direction. The alternative to trade a market reversal is less probable to have a successful outcome. That's very interesting. Okay, so why is that interesting? Because, well, do we discuss probabilities in terms of financial trading? Of course we do. Let's look at this market here. How can we understand and trade an equity market bull run? Well, what I'd like to just discuss is that last point. Why is there more of an advantage to trade this to the upside? Well, let's flip the coin over and say, well, where are the selling opportunities here? Well, perhaps we see one here. That's going to be short-lived, of course. We don't get a winner at all there. Okay, one here. That's great. We get a little bit of a move there to the downside, albeit short-lived. If we are selling the highs of these moves as well, which we are not sure, of course, we could look to capture that move, of course, as well. This is a false signal and doesn't provide us with any context. And then we get a bit of movement here as well. So, okay, there's a few trading opportunities, but, well, is it going to be as consistent when we are effectively seeing this bull run to the upside? Okay, so let's answer that question ourselves. Okay, so how can we understand and trade an equity market bull run? Well, there are more trading opportunities trading the direction. Is that true? Let's assess the price action. Let's just move this around then and say, well, where could we look to buy this market? Okay, there's one there. Here again, yeah. Here again, absolutely. Here again, we see many opportunities, and again, the market continues to shift. Again, and again, when we break these highs, again, let's say this candlestick here provides us with a fantastic trade to the upside, and perhaps here what to do. So quite a few trades, and again, if you're actually looking to believe in the fundamental move, you could effectively buy the market at, let's say, this price here, and the market does not pull back at all. Whereas trading against the trend, it's going to be much more short-lived, and we know that. So let's just assess this market. Short positions are short-lived. Can we agree with that? Absolutely, I would say we can. We could enter the market on many different occasions. Now, that is very true. We could look for short-term opportunities. The ability to scale into this market would maximize returns, and that is something very true. So what does that mean, guys? Well, it means that we could say, well, let's say we've caught a very good trade. We chose this candlestick for some reason, just right here. So we bought the market just on this candlestick. Well, then the market moves up. So we're already capturing in this profit, and the market then just causes this little range of uncertainty. So we're like, what do we do next? Let's say we buy the market just on this break. So this candlestick here, and the market trades up, and then gives us this candlestick, this doji candlestick here. We've actually bought the market once, twice as well, so we're more exposed in a good trade, and then we buy this market here again. Effectively, if this market moves up to, say, this point here, well, we're going to capture all of this profit from 3 separate trades, and that is going to be an absolutely fantastic trade. So you can maximize returns on the same market move. Now, you're going to need to manage your risk in a different way, we'll discuss that in future lessons, of course. The probability of a market reversal is much less. And again, we're back to probabilities. It is, of course, much less. Let me just choose a trade here. Considering we're in a very strong market bull run and the market pulls back from these prices, okay, let's say we're at this price now. Should I look to sell this market given the market's already retraced quite a bit? That it can be a dangerous trade given that the market is trading to the upside, okay? So the probability of a market reversal, total market reversal, is much less and will be short-lived. Absolutely, that is the case. Directional bias, okay? There is a school of thought that argues bias must not play any part in trading decisions. Do we agree with that? Well, I would say no, because directional bias is different than individual bias. Having a direction to decide whether you want to become a buyer or a seller is a very important question and answer for you. This is certainly the case from a risk management perspective. Okay, so allowing bias to cloud your judgment when in a losing trade is a big no when trading. However, one must engage the competence to realize there is bias in trends and in the markets already, and awareness of this must take form in your trading decision. Okay, so we understand this is different than individual bias. Having a directional bias is also a useful step in knowing and accepting you are wrong and help take losers early. So why could you have a bias? Well, let's look at market sentiment, and I've just chosen a few points here on screen. US stocks recover from sell-off with the best day since 2016. The best day since 2016. Wow. Do I want to become a buyer or a seller of this market? Okay, so that answers the question for me. Bitcoin tumbles almost 20% as crypto backlash accelerates. Do I want to become a buyer or seller in this market when I see this news? Is there a market sentiment trade here? Does that affect my trading? If I buy that market, am I worried to leave my screen for 10 hours? I would argue yes, absolutely. Wall Street FX strategist hit reset after euro calls fall short. Again, how does that change my positions for euro markets if there's a developed trend there? And if we're trading a commodity, here we have a cotton example here for the cotton farmers. Rains bring relief to cotton farmers. That is going to affect the supply and demand function of the market. How is that going to factor into any trade positions that I may have long-term or short-term in the cotton market? Okay, so very, very interesting indeed, all leading to market sentiment, of which is a function of present and future perception of price. The current sentiment is not always relative or correct. We know that is the true. Markets can trade irrationally. Understanding psychologically plays a huge role in asset pricing. And with market sentiment, we understand the concepts of fear and greed. They, of course, play a role in trading, even at the most professional level, guys. At times, psychology can overwhelm asset fundamentals. Bitcoin, we've seen asset equity prices, commodity prices, like, when we do see a shift, we're going to see panic selling in many commodities as well. So market sentiment is just as important to factor into your trading, and you'll see that reflected in your price action candles. Okay, so that brings us on to the end of our webinar too. I do hope you enjoyed it. What did we learn during the course of this webinar? What is all the fuss about? We now know what price action is, guys. We know what a Japanese candlestick is. We can revise these in our members login area with today's lesson, of course. As you go through it and develop a greater understanding of the Japanese candlesticks and the structure and what they dictate to the market, it's going to help your trading. Of course, it's going to help your trading over the long term. How can we profit by both buying and selling markets? Well, we can short sell and take long positions, of course. And trends and supporting trade decisions is what we look for as technical or well-advised traders. We look to make better decisions and increase our decision-making skills as a result of trends and supporting trade decisions. Okay, so very, very interactive, enjoyable webinar indeed. In the next webinar, webinar 3, of course, we will be discussing the essential knowledge. Of course, today's lesson was quite essential as well, but the essential knowledge we call, really, we're looking at how to analyze markets. How do we discuss market characteristics and what are the practical elements to trading? So it's going to be a very important, enjoyable lesson. I do hope you look forward to that. And we have concluded today's webinar, guys. So what I'd like to do is congratulate you all. I know we're all eager beavers here at the beginner level already of our beginners trading course. But guys, relax. We've completed webinar 2. I hope you have enjoyed it, of course. Taking the education here at Forex.Academy, of course, develop your educational skills. Hopefully you're trading on a live or demo account at this stage just to get used to the markets. And again, look forward to the next few lessons, particularly with the trading workshop lesson 4 this week on Thursday. In that case, guys, I'll let you go for the day. I will see you with further education here at Forex.Academy. If not, until then, I will see you tomorrow with webinar 3, the essential knowledge, and I look forward to that. So from all of us here at Forex.Academy, thanks for watching. We'll see you next time. Bye for now.